All right, I think we're live now. Let's make sure. Okay, great. All right, guys, good afternoon. Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. What is it today? Today is Wednesday. I'm getting confused because Monday we were off. Uh, it is Wednesday, June 22nd. My God, almost July. June 22nd, 2022. Rock and roll time. Let's go over the market. What you're seeing here is the Bloomberg terminal. So let's kind of go over first. This is direct from Bloomberg. They do like the whole recap, which is great. So a lot of the stuff that they talk about, we obviously know as I watch it all day, but it kind of gives us a nice little insight into how everything's going. Let's go over the day in terms of the market action. We're going to go ahead and bring up our Thinkorswim platform. Just makes it easier. Everyone's used to this platform, right? All right. The Dow closed down 47 points, down 0.15%. Nasdaq fell 1.15%. S&P down 0.13. We were up a lot higher earlier in the day, right before 3 p.m., and then we had a lot of sell orders come through towards the end of the day. Think about where we came from, guys. S&P futures earlier today were as low as below 3,700, and then we got as high as 3,805. You're talking about 100 point moves just today. So some volatility, sure. Nice, kind of flat-ish. Glad that we bounced earlier of the week, earlier in the morning. So futures again are important to look at, but again, it's really the cash session. Am I right? I still have some spy calls. I opened some other calls as well today. I still have my S&P futures open, and I still like where we're going in terms of the S&P, even though the price action today was, let's say, soft. Let's just call it that. Speaking of soft, or the VIX being soft today, the VIX was down today. Let me go ahead and bring this up. The VIX was down about 4.11%, 28.95. You have the right there, that 200-day moving average. I expect us to hit that pretty soon. Equal S&P was actually flat. So more value names did well today. Small caps down 1.19%. So if you just look at the scoreboard today, from this morning to today, you'd have been like, oh, we ended the day flat. Nice recovery. But it was a lot more than that, a lot of more moving parts. We had Powell speak today in front of Congress. I'll go over exactly what he was talking about. The dollar came down today, down 0.21%, 104.21. We talked about how important the dollar being down is. Look at bond yields. Bond yields coming down. I know I'm not I'm not going to be the first one to get too excited either. But I did say this morning that again, below 30 on TNX, and you want to refinance your house. Well, okay, if you have low rates in your house, don't worry about it. But if you're looking to buy a house, call your broker and see if you can lock in below that 30. So again, you can watch us on the note. You can look at the ticker TNX or look at the 10-year. When the 10-year hits below 30, which is 3%, go ahead and call your broker or your realtor and start shopping, because that's probably the best we're going to get in terms of interest rates. So if you're looking for at least interest rates to at least subside a little bit, we may just get it. Even oil came down today. Let me see if I can get that. Oil came down today, down 4.77%. And I've been saying it for weeks. We just got to overbought conditions. That works with any asset. We talked about XOM being overbought. We talked about CVX being overbought, XLE being overbought. The problem is trading options with it, there's not a lot of volume. That sucks. But again, if you guys took profits on your oil positions, great. If you didn't and you're holding and you see if maybe you want to buy some a little less, again, the target for crude oil, I had a question on that on Instagram today. Below 90, I want to be a buyer of crude oil. I think we get this round trip and we come back down to 90. President Biden was talking about, gas tax holiday or something like that. That's not going to really move the needle. Like saving, 16 cents per gallon. It's just not. But what is going to move the needle is that if we have recession fears, that means demand goes down, people are not shopping. If I was the Senate or senator or president, pretty simple fix, at least temporarily, I would say I would give tax breaks to corporations that allow people to work from home. That reduces demand for gas without basically killing the energy companies either. And at the end of the day, guys, energy companies are just getting forward. They're just making up all the money that they lost for the past 3 years. Energy was a dead sector for 3 years. And I know we don't like high energy prices, but I mean, there's cycles. We love high housing prices. We love high asset prices. Oil at least has to come up too. Now, I'm not saying we should have $5 a gallon forever, but again, guys, there's cycles to everything. Always understand that. Bitcoin soars to 69,000, but yeah, crude oil has to stay at 50. Come on, supply and demand. That's what creates a market. I do think crude comes back down. I do think crude gets to around 90, possibly 85. I'd want to buy some oil companies there. It's pretty much contrarian, buy when no one wants it. Buy Bitcoin this weekend. No one wants Bitcoin. I'll take it. That's fine because a lot of traders, a lot of investors don't see 2 steps in front of them. They don't think big picture. There's always cycles, guys. Oil will come back down. Yes, you'll get to 90 and then you'll get to 75 and then you're going to revert to the mean, right? We always talked about reversion to the mean, reversion to the mean. If we look at a 3-year chart on crude oil was, $6.50 a barrel. It was negative at one point in 2020. Guys, come on. And if we stretch it out even further, take a look at the volatility that crude oil has gone through. This is just crude oil futures. Again, this is how it's priced. If we just go by median, being like just reversion to the mean, we're pretty much right around $70 a barrel, historically speaking. If we even increase it even further, this is the max weekly. This is about 20 years of data. And you could see even in the 90s, $20 a barrel. Then we spiked up in 2008, and everyone thought, oh my God, we're going to have $500 a barrel gasoline. And of course, what happens? It comes back down to 32. That might happen to crude oil. Again, if we get a peace deal in Russia and Ukraine, nothing has been speaking of, nothing has uh, shown that's going to happen, obviously. But again, guys, these commodities have cycles. Oil is no different. And again, if you want to buy oil companies, I would just wait. Just wait a little bit because you're going to get the right price. And if you think oil is going to get back up to 150 anytime soon, I just don't see it. I just don't see it because a lot of consumers are going to cut back on driving. And just when prices are that high, people are just not going to get demand. And then if we have a severe recession that a lot of economists are predicting, what the hell do you think oil is going to do? If people don't have money to drive because there's a recession or people don't have jobs, crude oil is going to go to 50. Again, recessions are that poison pill for inflation. It's the poison pill. It's like the chemotherapy for the inflation being cancer. Again, do you want to beat inflation or what? What do you want to do? Soft landing, like Jeremy Powell is saying, or the Fed is saying, that's pretty tough. That's a lot to ask for from a Fed that's gotten it wrong a lot. So again, do I think we're going to have a recession? I still don't think so. I still think the employment or labor is too strong. Yeah, we have some inflation. Yeah, it's kind of happens when you have the grand reopening. All the demand pushes in. Everyone wants to travel. Everyone wants to drive. Everyone wants a car. Everyone wants to go here. When you've been cooped up in the house for 2 years, what do you expect? People are going to drive. People are going to take that drive. What do you expect happens to oil prices when supply doesn't change? It's simple. It's simple. That's the key. High yield credit today, flat, 73.98. I wanted high yield credit to go a little higher today. But again, them being down, especially with TLT being government bonds being bid and LQD, which is investment grade, being up 0.73%, it's a bit concerning seeing that high yield credit is down. Silver down 1.10% on SLV. Gold up 0.40%. All right, we talked a lot about gold, crude. Take a look at gasoline down about 1%, $3.65 a gallon. And taking a look at Bitcoin trading at 19,870, 1,047 for Ethereum. So down today, obviously. The big snooze today was Chairman Powell speaking. And the thing that I took away from this was the fact that he said they're going to be data dependent. He did not throw 100-point rate hike off the table. He did not say that. I think he learned his lesson. But I think what he said today in terms of being data dependent on inflation, it seems like they're going month to month. And I think that's very prudent. But the problem is that CPI numbers are lagging indicators. They're not forward. So again, all this the other ways to look at inflation, PPI, CPI, or core inflation or headline inflation, that's all lagging. So the Fed is kind of in a box. If they aggressively raise too tight, there'll be a recession. And if they just wait, inflation is going to rear its ugly head. The market is the real equal maker, or the balance beam, let's call it. The nice little triple beam balance, right? If the market does the job for Powell, meaning lower asset prices, lower commodity prices, then you don't need to raise. Because remember, like I said before, when we were getting so excited that after that 75 basis rate hike and everyone was cheering, I said, remember, 75 basis points does not drill more oil, does not bring more oil, does not make gas, does not fix anything in Russia or Ukraine, does not lower any prices. It's just killing demand. The Fed is saying, we are going to make you stop spending until you're broke. One way or another, we're going to make it stop unless we can get supply chains going or inflation subsides with some other magic bullet. But that's pretty much it. At least the bond market was telling us that inflation is not that scary, or to the point of, oh man, we're kind of screwed. Because you could see here on TLT, nice bid today. We had a nice bid. So again, if you think inflation is going to go higher, why would you buy the bonds at this yield today? You would want to wait for a better yield or better return. That's where we are. Take a look at S&P futures. I really want to show you this. So again, I'm pretty sure you guys know what's up in terms of technical patterns. This is a pretty easy one. Here we go. This is the S&P on the 1 hour. And what do we have? We have an inverse head and shoulders. So what does that mean? Oops, let me see if I can get this going. Whatever. Up. That's where we're going to go. I just went yellow to make it easier. So you can see an inverse head and shoulders. Not the best looking one, but again, an inverse head and shoulders. And what have we been saying? We're going to fill these gaps here, 38.96 and 4,000. So again, I am very bullish still. Short term for a snapback rally after 4,000, God knows, because we're still in that downward channel. It could reject like it's been before. It could break. But for the most part, we're going to get to 4,000. I think it's pretty much set, barring some huge macroeconomic disaster or some really macroeconomic headwinds. It's just technical analysis in terms of oversold to oversold to being neutral. That's all I expect. We just got oversold too quickly. Just like oil got overbought too quickly, you're going to get some kind of pullback. You're going to get some pull forward, shorts covering, or what have you. So again, inverse head and shoulders on the 1 hour. It looks like where the path of least resistance, let's say, is up. Even though today we didn't have the best price action towards the tail end of the day, but that's fine. I'll be watching futures as we go along. I'm still holding on to my calls. I expect us to go higher. Keep in mind, man, we were this close for having a back-to-back green day. I mean, we haven't seen that in forever, right? So again, things are getting at least a little better optically. But again, it is still the end of June. And then we just have to play it ear by ear. I mean, the way I see it is like it's a different market every day. Every day is a different market. I mean, I wake up in the morning and I'm like preparing for anything because that's where we are. And it's been that way for a couple years. But I still like us to go long just for the simple fact that we have the inverse head and shoulders. And then we had that downward trend that I was talking about, if you guys remember, where we've kind of stayed within that region. I have the chart here, if I could show you, just to make sure that you guys see it. Let me go and bring it up. Okay. The cool thing about Bloomberg, the terminal, is that it saves all my charts, like all my setups. I don't have to do it over again or what have you. Like it actually literally saves it and it gives me all the information I need. And it's in a world of its own. Here you go. So again, we talked about this downward channel on S&P. This is SPX. This is a 1 year rolling, 52 weeks. And again, a little higher. I expect us to go higher. We still haven't filled. We filled the 3,800 gap today. We have a 3,900 gap and a 4,000. Again, 4,000 would be that apex right there, that kind of top line of that downward channel. That's where I expect us to go. And again, we have the inverse head and shoulders. So again, the market is telling us something. I know right now it doesn't seem like much, but if I told you 6 months ago, hey, we're going to get down to 3,800 on S&P, you probably thought I was nuts too. Again, we have to see exactly what is the future hold for us in terms of economic data. We don't have much this week. All we have is crude oil inventory tomorrow. And I think Powell speaks in front of the House Banking Committee. I may be wrong. He usually does both chambers. He did the Senate today, but not the House. I usually is the House first and the Senate. Regardless, my point is that every day is different, and you just need to stick with your analysis and make sure you have a reason for why you own something and why you're trading something. It's so imperative. This is such a hard thing to do every day. You have to have this patience and this resolve and this kind of idea to stick to your guns. Now, again, it's tough, especially when things don't go your way, but you have to be a little patient for things to go. And again, people are very visual, as obviously you're watching this video, and you could see what I see. I did a TikTok video on this. I firmly believe 4,000. That's why I'm holding futures contracts. That's why I bought calls. I actually bought some TGT today. I bought some Target. I talked about that this morning. I'm glad I got a little discount. We got that gap fill. So again, I've been doing some kind of moves. I buy some SPY-G tomorrow. Tomorrow's Thursday. That's my SPY-G day. And we'll just have to go from there. Every day is different. But you know what stays the same? You being here with me, going over it all. So either way, rock and roll. Can't wait for tomorrow. And let's see what we get. Have a great rest of your afternoon, guys. And oh, what's up with Facebook? I didn't see that question. Let's answer it. Meta. Meta, ugly, right? Down 0.76%, but it was down yesterday even more. Well, guess who's going to be on Mad Money today? Mark Zuckerberg. So let's see if he has something to say about the privacy challenges that he's having with his firm or his company, excuse me, and the metaverse and the cash burn. Meryl Sandberg. It's going to be an interesting interview. I will be watching today because I am a Meta shareholder. It's kind of important to me to know what the hell the CEO is talking about. And guys, if you want to know something, here it is. Here it is. I'll show you. It's all you need to see here. Give me a second if I could bring it. Meta platforms, right? Give me a second while I bring it. I have to look it up. Where is it not coming? Okay. I was trying to show the insiders selling metaverse. Mark Zuckerberg has been selling forever. And that's just been what it is. I mean, you could see it. Look, here it is. Sector SEC 44, and you could see all the sales. They've only bought $798,000 worth of stock, but they've sold $15 billion. If the director of the company or the directors of the board are selling the stock as recently as the 14th, my God, the Jennifer Newstead, chief legal officer, sold 342 shares. How about this? I'll bring it up to you guys. How about this? Marin Levine, 3710 shares traded at 194. Look at this. These are all sales. Options awarded sales. I mean, if they're not buying and they work for the company, that tells you a lot. I would not want to touch Meta here just to I wouldn't want to dip my toe in the water. To be fair, they are trading at a nice multiple, 11 times forward earnings. I think, yeah, 11 times forward earnings, which is nice. But if we bring up the price action, not pretty. I mean, could we get down to pandemic 137? If the insiders are selling, you should stay away. Simple as that. That's the best thing I can think of. When they start buying guys, then I think Meta should be good. But until then, let's let these guys sell their shares. I still own some. I own Facebook or Meta now, and it sucks that that these guys are selling. They don't believe in their company or they need the money. Who knows? But it doesn't inspire a lot of confidence. Meta definitely is coming down. Right now, pretty ugly. We do have some gaps to fill. We got 171, 175. Maybe Zuckerberg provides some kind of color into the metaverse. What's the difference? And really gets everyone excited. I wouldn't be surprised if Meta opens up tomorrow at 160. You can timestamp this. Maybe Meta opens at 160 tomorrow. We'll have a little fun. Let's see if Meta opens at 160 post Mad Money with Jim Cramer on 7 at CNBC. Because, these guys go on the channel or go on CNBC. They're going to talk about what's good about their company. They're going to tell you why it's a great stock or why it's a great company. They're not going to tell you, don't buy my stock. They're not going to say, hey, we're screwed. They're going to say the best case scenario, people cheer it, and that's usually the case. That's the market. Have a great rest of your day, guys. I'll see you guys tomorrow. Cheers.